The fact that artificial intelligence and other technology innovations are intersecting the sector at CAS more than they are tax and audit, you get this emphasis on CAS. And I think that also is being fueled by technology. All roads lead to technology. Even the PE dollars lead to the technology. That's why the accounting services is comprehensive. It's the preparation, it's the review, it's the delivery of the financials, and it's still all the past. And when artificial intelligence intersects quantum computing, you're going to get massive displacements in all of the professions, including Shawn Medical.
Hello, everyone. This is Shawn Parikh bringing you WTF podcast. We are trying to figure out. And I have with me today a friend and, a colleague as well. We know each other since about 4 or 5 years, since I have been working in accounting industry. And I have been I admire him a lot for the reasons, for the wonderful property called Scaling New Height that he has created. Plus his understanding of accounting industry, his connects, and his love to transform accounting as a profession. He has helped more than hundreds of thousands of accountants across, and helped them build better practice, help them with implementing advisory services and with technology. So, hey, we have with us Joe. Hi, Joe.
It's great to be here, Shawn.
So, Joe, thank you thank you first of all for taking the time out and participating in this. So, Joe, I know that you are not by qualification an accountant. So
I'm not a CPA, no.
You're not a
I am an
CPA.
experienced practitioner, but as a non-credentialed practitioner, yes.
Yes, but you operate a business and where you actually touch upon the life of accountants day in day out. So how did from an experienced accountant transform to what I call as mentor, trainer, and transformer to this accounting industry?
Yeah, so I actually started out outside the industry, got my start in the industry as a non-credentialed worker doing tax returns and what they now call client accounting services, but it was write-up back in the day. And from there, ended up training other accountants, and that's kind of how the career path rose. So no, I'm not a CPA, but I did find my origin story from within the industry. It's just I like trading, so instead of doing the work, I started training and coaching, and now I've trained over 150,000 accountants in everything from technology to practice advancement, staffing strategies, you name it.
Wonderful, wonderful. So yeah, now let's straight away jump into our topic or our idea. You have this training and coaching program, and in one of the areas of that program is building, implementing, and being successful at client accounting and advisory uh, service line, that practice area. And you have been helping many accounting firms in that area. So we would like to pick that knowledge, and the objective is a firm between 5 to 50 member. If they are already in this, how they can really scale, make it more, do it more profitably, or if they are not, how they can really leverage it. So that's the kind of objective. So let's start with the fundamentals of it itself. So when you position, I mean, bookkeeping and accounting is being done since ages by accountants. So how this client and accounting and advisory services is being, positioned at the forefront so much right now? Why?
Yeah, so why is it such a big deal now? I think there are a couple of things. Is it should have always been a big deal. And it's a misunderstood category. I'll say both of those things. So when you take the A and you make it client accounting services, it has historically been the bottom of the professional totem pole. It was looked down on by tax. It was looked down on by audit, and it was because it was considered to be more of a pedestrian area of the profession. It tended to gather more of the non-credentialed workers like I am. And because of that, it was not as big of a profit center. Probably the last part was the key. But I want to delineate where it should have been a profit center. It just wasn't as much of a current revenue driver. And the partnership structure in accounting firms was such that whoever owned the revenue owned all the power. And that was typically in the audit practices and the tax practices. Now, why is it becoming such a big deal now? A couple of reasons. One is the intersection of artificial intelligence into accounting services, making it much more efficient and therefore much more profitable. And the second is healthy respect for more, even if they don't call it subscription economics, for the truths behind subscription economics. That if somebody is going to pay $1,500 or $2,000 or $2,500 a month, month in and month out, in a very sticky engagement, that provides a greater revenue opportunity and a greater profit center than somebody paying $1,500 or $2,000 once a year. It's easier to staff, and it's much more manageable at scale. So the third reason that it's becoming more, and these are not mutually exclusive, it's becoming more important, is because of the PE influence into the CPA firms. And PE is being influenced by residual subscription-based economics, and they're being influenced by artificial intelligence technology. And it's not just AI, it's really all technologies that have caught up with the opportunity of accounting services to make it extremely efficient. So when you get the trifecta of PE, of recurring sticky work, and the fact that artificial intelligence and other technology innovations are intersecting the sector at CAS more than they are tax and audit, you get this emphasis on CAS.
And that's a great summary. AI, recurringness of the revenue and PE focus, and I would come to AI and subscription-based revenue, but even we have seen that larger firms have started focusing on CAS now. I mean, in your conference, we had now major firms group as well participating. Some of them were our clients. We work with hundreds of about top 500 clients, and we haven't seen that focus, before. And probably one more reason to kind of add here is staffing shortages. So, well, businesses who are doing it in-house, having a larger team, are not able to find that qualified and smart bookkeepers and accountants and advisors to do that, and they are resorting and going to CPA, and CPA can leverage this opportunity. And while traditional back office or bookkeeping was done with compliance perspective in mind, this is more like forward looking, where you try to help businesses. And now with offshoring tech, AI, and subscription and predictability, growing it profitably has become, it's quite an alternative where you can, I mean, it may not be able to give you as high margins as tax or assurance maybe, but it's still a sustainable, reasonable, good margins for building up a division.
And I would argue that at the end of the day, the margins are actually greater than tax or audit, because if you're using subscription economics and you're translating everything into a monthly recurring revenue rate, which is important when you're looking at regulating staffing, whether it's outsourced or in-house, you still are you're paying for a full-time equivalent. I know there are tax models where you can pay per return, but it's much higher cost per hour than if you're going to be paying for somebody at a full-time equivalent, whether in-house or outsourced. So if you're looking at this MRR measurement, which is a truer picture of the actual year-round lift, and you were to burden the cost of temporary staffing and the disruptive cost of seasonal work into that tax model, CAS is actually more profitable than tax. And maybe not as much audit, because you can, audits not as focused on Q1. A lot of businesses that are audited, have fiscal year ends that aren't calendar year ends. But and and it's a little bit easier to regulate the workflow, but tax is extremely interruptive. Now, I'm glad that you mentioned, Shawn, the outsourcing, because I should have brought that in too, that there have been huge advancements in that category over the last few years. And I think that also is being fueled by technology. All roads lead to technology. Even the PE dollars lead to the technology. That's why they're putting money into the space. And, we're now much more of a global economy. We're much more of a global workforce. And the technologies that are in place now have provided the security and the privacy that especially larger firms need in order to engage.
Yeah, we work with about uh, half a dozen PE firm right now who are directly owning either fully or partial interest in an accounting firm who are happens to be our client, and their focus on client accounting and advisory services and offshoring has just it's very different than what typically a firm would look at, you know when and they have this roadmap in place that we need to have such and such way of pushing things offshore. Our structure should be such. So yeah, I absolutely understand. Offshoring, one of the key levers could be part of tech and tech enabled levers, which is triggering CAS. But let's go to the next element, which is basically the comprehensiveness of client accounting advisory services. So I view this, and again this, and then I would like you to elaborate. Is whenever you work with a business client on CAS, uh, it's back office at the first place, transaction support. Then you have tech, which helps them to get do things more efficiently, and then you have what I call as staff augmentation piece as well, and then reporting for decision making, and then at the last advisory, which is for forward looking. So I see CAS as a gamut of multiple things rather than just one thing. And I kind of remember your slide in the conference which talks about it, I think in the four quadrants, and you can actually walk team through that. I mean,
Yeah,
walk
so
your
Shawn,
team.
you touched on this too with some of your horizon language, and that's the best way to frame it. Is you have the horizons of the past, the horizon of the present, and the horizon of the future. And if you take the five components of CAS, they will fit into one of those three horizons. So what we have traditionally called accounting services or financial compilation, financial reporting, that the product there is simply information. If you think about what you're delivering, what somebody's paying for, that business is paying for a profit and loss, a balance sheet, maybe a statement of cash flows. They're paying for it monthly, and it always is a past report. It could be 5 days in the past. If you're doing real time accounting, it could be 2 hours in the past. But it is always the past. You can't record a transaction until it has taken place. If it's 5 seconds old, if it's 5 days old, if it's 5 months old, right? It is always a recording of the past. So then you have this present horizon. And in the present horizon, I would put two different termed services. One is back office process outsourcing, which you touched on. And the other is controllership services. And the controllership services often gets missed in the mix. A lot of people will conflate controllership services with, well, that's just the accountant review cycle of accounting services. But I want to think of it differently here, Shawn, that accounting services is comprehensive. It's the preparation, it's the review, it's the delivery of the financials, and it's still all the past. But controllership services is more than just like a super accountant. A controller has three different values that they bring to a company. If I were going to hire it and I have a controller in-house, I've got a multi-million-dollar company, I have a private accounting department in-house, and I have a controller. And if I think about what my controller does, it is his job to safeguard my journey. And he does it through either managerial compliance to make sure that my people are staying on budget, staying on spend policies and procedures. They're not flying first class when they're supposed to be flying coach. They're not staying at the Ritz when they're supposed to be staying at the Courtyard. It is his job to enforce all of that. It is also his job to make sure that my department's heads stay on budget, right? He is doing managerial compliance, and that protects my journey. Now, he is doing regulatory compliance. So he's making sure that I stay in good with the 14 states in which I have employees, the 3 states in which I have income tax nexus. Now, he's not doing my income taxes, but he's making sure I stay compliant, representation, franchise taxes, any business license requirements that I may have with those states in which I have nexus. If you think about, if I were just to take his role out of the company, think about my exposure, Shawn. I mean, I would not have my journey protected in the state of California, in the state of Georgia, in the state of Texas, the 3 states where I have nexus. And I would not be in compliance with the 14 states where I employ people. Now, then you have this third area where he protects my journey, and that's with risk mitigation, internal controls, separation of duties, privacies and securities, data privacy and data policies and data retention policies, handling policies. And if any of that data were to get into third party hands or even into some of my employees' hands, then I would be, I would not be in compliance with my own employee agreements or with my privacy agreements with my customers. So it is the job of the controller to protect my journey. Now, if you think about what if I were hiring a CPA firm, Shawn, to be that controller, they've got to lead out with that's the product. Yeah, maybe I'm doing a payroll tax return for the state of Pennsylvania, but ultimately I'm protecting your journey. And that's a product that clients will buy. And it is so much bigger and so much different than accounting. Now, back office process outsourcing is the other journey protector. And that's where I'm taking the administrative work of my back office and I'm pushing it to an outside provider. And then you've got the future horizon, and that would be financial planning and analysis services, which is often conflated with CFO. They're not the same thing. And then you have CFO, which is more of an executive leadership role, and that would be for businesses usually with a little larger than I am. I don't need a fractional CFO. I just need an FP&A expert. Or I might need a CFO transactionally to negotiate a line of credit or go down to the bank for a minute, but I don't need one all the time. But if I were to get to, maybe more like an 8-figure run rate instead of a 7-figure run rate, maybe I have 50 employees instead of 25 employees or whatever it may be. At that point, the complexity gets to the point where I need an actual fractional executive to take a leadership role in my business. So you've got accounting, controllership, back office process outsourcing, financial planning and analysis, and CFO. And I just moved it from past to future with that lineup.
That's wonderful. Well, one thing I want, because when you put this beautifully into past, present, and future horizon, that helps to put things in perspective. A lot of firms that we deal with, I always tell them, target larger clients with engagement value of more than 50 grand a year or a 40 grand a year.
Mm-hmm.
So, well, the only question that comes in, there is some amount of fear, I don't know. While they would be doing tax advisory for them, but when it comes to doing this, either there is a capacity or probably they think that they will not be able to deliver on reports, technology. There is some level of fear when it comes to getting large engagement or chasing large clients.
It's a talent and process gap. I mean, they understand the technological category. They know if you're on Xero or on QuickBooks Online or Intact, they can pick their GL platform. Increasingly, NetSuite now is playing in the CAS space. But, pick your GL platform. They could be pretty familiar with that. Maybe even a couple of add-ins. But when you're looking at talent, and talent's more than just a body and a seat, it's the knowledge necessary to run the portfolio. There's a talent deficit. And that's a place where you can help, Shawn, because you have talent surplus that you can lend to the industry. But they still need that director of client advisory services in-house. And that role is very hard to fill. It's in very high demand. There's a talent shortage there. And the most important gap that scares them is the process, the workflows. They know they can buy a workflow solution, but that's like buying an empty book. You still have to write the book. You still have to put stuff in it. Now, increasingly, platforms are preloading templates into their workflow solutions because they know that makes them, more sellable. And I saw something recently where one practice management workflow solutions even building a community to share out workflow templates just among their user base because they're recognizing the same thing I'm seeing, which the biggest gulf from here to there is I really don't know how to scale the work. I don't know how to democratize the knowledge. I can handle 5 clients. I can handle 25 clients, but if I have 250 clients, I'll break. And you could do wonders for them, Shawn, to staff that up on the production side. Your category is really the gateway to that scale, but we got to get them over the process hump, and we've got to get them over the leadership hump in-house. Those are tough barriers.
Well, why our category? Well, now
I know
we
your category is really big. I shouldn't limit you now. Yeah, my CPE one is one. Yes, you're right. But your outsourcing component of your
yeah,
one
yeah, no, no, I
platform, yes.
understand.
Thank you for bringing me on the rails on that. So yes.
Yeah, yeah, yeah. No, no, no problem. Well, so I think you highlighted it correctly in terms of, talent and the process and technology. These are the three areas. And I always say that start with one and two. Why you're
Mm,
worrying about 50?
yeah. At least
Because
get your foot in the water, right?
yeah, and that learning in itself, if you start investing, that learning will itself help you create this,
Mhm.
processes, which will eventually help. We can talk about standard operating procedure, building niche, industry focus, but it cannot happen in first client. This
Mhm.
journey starts only when you start taking on one or two or three clients, and then you realize that this client I have discovered that this is a special niche that I am using, and from that learning you can start targeting the niche. So I have never. I'm finding it hard to believe that targeting niche can just happen right before
Yeah,
starting.
it's part of your business plan before you launch. It's really
Yeah,
difficult. I mean, you could
yeah.
do market studies. You can know what the overall approachable or addressable market is. Obviously, you should look before you leap, but I know that it is often discovered more organically. I think it also has to be an extension of your culture and your vision. I mean,
Yeah.
we have a niche within accounting firms, and people always often ask us, well, you could help a law firm too with about half or 75% of your content. And I could, right? However, our niche is an extension of our culture and our vision, our mission, and our purpose. Um, and therefore, we've chosen and we're sticky with accountancy more than just because of the economic modeling. But I also want to say, Shawn, too, that there's a panic in the industry right now, and I'm not using that term hyperbolically because they did ignore CAS for too long. So
Mhm.
if we were to approach a lot of firms and say, well, just start with one or two and then find your niche and then build your process, that would have been a great story 5 years ago, 10 years ago. But right now the urgency they feel is this time to market problem. So I'm finding a lot of these larger firms are trying to acquire their way into a faster time to market, catch up with 5 years that they didn't do the R&D as they should have. Um, I've had probably 10 firms in the last month alone approach me and say this is the kind of firm I want to buy. And what's interesting is they're not looking, a lot of them, at CPA firms. They want to buy these non-credentialed CAS practices, these standalone CAS practices, because those folks are way ahead of the innovation curve, statistically, than are the CPA firms. They've had to make this their entire livelihood. They've had no tax or audit to fall back on. Sink or swim. I either do this well or I don't survive. And that refinement process has created some powerful platforms out there that folks can acquire. And I noticed in your platform and your one, you also have mergers and acquisition support. You must be seeing this same thing.
Well, we just started, so we will still have a lot. We will still see how things are shaping up. But I agree, and especially with private equity money and focus, acqui-hire and acquisition
Hmm.
becomes
Acquihire. I like that term. Yeah.
yeah. So becomes like kind of a go-to route. you
Yep.
know, for them. And there is a FOMO. I agree, especially in larger firms. There is a FOMO that CAS is being missed out. And
Yes.
secondly, the CAS can be a natural extension to your advice. I mean, current other service lines. All of those businesses that you.
It's an income tax accelerator. If you've got
Yeah,
a corporate tax book and you've got a CAS department that knows what they're doing, you've got good, clean financials on January the 15th. I think any tax practice would love that.
and I have seen sometimes in arrogance some of the tax practitioners saying, "No, no, we don't do CAS." I mean, as if it was something kind of a notch below
So you
than.
were spotting that same totem pole that I was referring to. Yes, yes.
Yeah,
Yeah. But now they're realizing that tax efficiencies,
yeah,
they can't ignore it anymore for that reason alone. But I think it's more, one thing we haven't talked about is the disruptive component of technology. And, I covered this in my keynote at Scaling New Heights as well, that artificial intelligence and other technology disruptors are going to displace income tax preparation and even income tax analysis faster than they will displace complex accounting. And that will be displaced faster than back office process administration and controllership. So if you want to invest in the longest term surviving technologies that will survive the artificial intelligence revolution, it's controllership, it's back office process outsourcing. And then I would also add in audit and income tax representation because those require a human and it requires a certified human. But yeah, you don't want to invest big energies into disruptible service lines. Just ask the travel agency, industry.
and coming back to the industry focus, whenever somebody says building a niche does not mean you have to have just one. It could
Right.
be three, it could be four. uh, Building a niche, according to me, is you have an experience of the industry, you understand the nuances, and as you said, there is some past connection to it. You doing your focus on accounting industries for culture and your experience of working in the past, understanding accountant. So, somebody says that you started it afresh. Most of the niche have been very organic,
Yes,
discover.
very organic. Yeah.
Uh,
And it's
uh,
risen up, I think, and that's not coincidental. I think we draw the kind of people that we love to serve into our firm. We serve them well, creates referral business. We enjoy it. It energizes us. So I don't think it's like, well, I just happen to have a bunch of farm clients. No, there's something about your firm's culture that loves farmers, right? Something about your personal value that loves farmers or whatever it may be that gravitated your firm in that direction. But I love what you said, Shawn, about niche doesn't mean only. So most of the most successful cash practices I've seen out there, they may brand themselves as we are the farm experts, we're the construction experts, because it helps to widen that front door. But
absolutely.
in their practice, not just happenstance, but as part of their model, they have a general services division that'll take any business of any kind. It's just that they lead out with their differentiated knowledge. And now maybe on the financial planning and analysis services, they lean more niche because it requires more industry specialization. If I'm going to do financial planning and analysis for a restaurant, I better understand overpouring at a bar, and I better understand table turns. So if I don't I can't advise them. But with accounting services, with controllership services and back office process outsourcing, less industry specific knowledge is required to scale those, but you still need that big differentiator on the front door.
Absolutely. So
Yeah,
understanding nuances of the industry and being identified as an go-to expert for that industry
it's
is
huge.
something that helps thought leadership around it. Well, and then that, and one more point to add about our past connections. One of our client only caters to landscaping industry. They call it green industry. And the connection is the father, I mean, father of that lady happens to be were, running a business in that industry. And, she has seen the whole value chain so closely. And uh, it organically came through that her father's existing references gave some businesses, and then she understands the whole value chain, different players in the industry, what are the key metrics, labor utilization. So it organically built out for her. And in turn, when you are positioned as an expert, acquisition of client credibility increases, and acquisition of client becomes a little more organic, easy, and you can charge premium. And
Yes.
coming back to the second point, we have a client in, I think, St. Louis, Missouri. They have so they do creative agencies, they do legal professionals, they also do cannabis, and they have three separate pages on their website with three separate pricing on it. Right.
Right.
So
Right.
this could be also an approach where, and I have not seen many firms doing that, but in all their pricing, which is what we call subscription-based monthly pricing,
Hmm.
they have included what is, and there are some line items in those inclusions which are specific to that industry.
Right. Right. As it should be. And
Yeah.
then I bet you anything, if you're not either of those, creative agency, lawyer, or cannabis industry, they'll probably still take you. They probably have a division that will service you well. They'd be smart to have that, but that doesn't differentiate you on your website. So, like, they might have something that says other businesses, we have specialists in all sorts of industries, call us. But that's not the sort of thing you fill up a website with, right? Yeah.
Yeah. And with that, let's jump on to more important technology piece in this business. And I remember your slide where you made those projections of 5 year, 7 year, 10 year, and
Right.
which actually scared the shit out of people sitting you know, with what you mentioned about it. And well, one funny joke I want to share here, which I think somebody from the conference or you shared it. You mentioned that AI is going to do this in 5 years and 7 years. Some predictions were made, and in my mind, I was saying that for our clients, AI is already doing that. It's not just
Yes.
artificial intelligence. It's anonymous Indian Indian.
Well, yeah, so there's a certain, you're right. There's a certain, yes, where I believe the offshoring or the outsourcing industry is already doing so much of the work. And I think that more and more you're going to see those firms providing direct to business, options, not just through accountancy options. They're already doing it. Also, you're going to see platforms like Intuit accelerating the curve. They just announced, well, they announced 4 years ago, but they just made significant advancements, announced it into a Connect of their AI-driven expert platform. And their latest shareholder or investor day, I should say, presentation, which was in September of this year. We're recording this in November, just about 8 weeks ago. Some of the technologies that they featured there at the shareholder meeting were way ahead of where I thought Intuit would be at this time. And we're talking June to September, right? There was a lot more under the hood than I realized even when I gave that keynote. So I think that those projections are probably conservative. I think it could happen faster than that. And I also think that there is an acceleration to what they're calling the AI singularity, where once, and I just read an article on this in Forbes this past week, when AI starts programming AI, you're going to end up with an exponential increase in abilities. The biggest gating factor here, Shawn, is if AI is the mind, right? Then the computer infrastructure is the brain. And it takes a tremendous amount of brain power to operate artificial intelligence at the kind of scale we're referring to, where it can do the bookkeeping for the planet, right? When it can do the financial planning and analysis for the whole planet Earth. We don't have computers powerful enough for that yet. But Michio Kaku was our keynote presenter at Scaling New Heights, and he came because he's an expert in quantum physics and in quantum mechanics. And he wrote the book on the quantum revolution, and he is saying the quantum supremacy, he called it. And that book, I would encourage every accountant to read, projects what a quantum brain would look like, my metaphor, quantum computer system. And when artificial intelligence intersects quantum computing, you're going to get massive displacements in all of the professions, including Shawn medical. Not so much the certified treatment and prescription that will still require a person, like audit requires a CPA, and like representation requires an enrolled agent or CPA, but diagnosis, I won't have to leave my own bathroom to be diagnosed because the smart toilets will be empowered by quantum computers and it will read everything coming out of my body and give me constant updates at the cellular level. All this is covered in Michio Kaiku's book, and we're not talking centuries away. He said it could happen as quickly as 10 years from now. So all of this is designed. Yes, it is scary. But the reason that I bring it up, Shawn, is not to scare people or to be Chicken Little and say the sky's falling, but I'm going to come back to the travel agency industry. The travel agency industry believed that they could not be displaced because they could not foresee the information age. They could not foresee ubiquitous internet. They could not foresee orbits, Travelocity, hotels.com, right? We need to be able to foresee this, and it's not science fiction. It's inevitability. It's short horizon. Let's be more prepared than the travel agency industry. And to be more prepared, it means getting into those less disruptible fields. We're back to controllership, back office process outsourcing, executive leadership, like a CFO might do. Those are going to require a human for decades to come.
Well, that's a good conclusion and very optimistic. But coming back to the technology piece, and so there are at every in every segment of CAS, there's technology which can really make things efficient, whether it's right from categorizing transaction or month end close or reporting or so I always say that I classify this in technically three A's, which is one is automation, second is analytics, and third is basically artificial intelligence. So automation kind of makes things more efficient, functional. Like if I give very bare example, we used to manually input transactions. Now most of the banks are synchronized with most of the softwares now, not just QuickBooks, NetSuites and Intact and
Because you have platforms like Plaid out there that are just, able to connect into all the banks.
yes. So with so what would be your recommendation? So especially with these firms, uh, how should their focus on technology should be in terms of when they are kind of building out their CAS practice and having their
Mm.
strategy
Yeah,
focus.
so I would prioritize platforms that have vast ecosystems first. Um, but then ironically, I would not create a highly disparate technology stack. What you want is options. You don't want to buy everything just because it's in the store, right? So go shopping with a lot of different integrated options and then pick wisely, pick carefully, and build a stack that isn't fragmented across your clientele. So go shopping, but pick one payables automation solution and try to standardize around that one as much as possible. Thinking about all the different variables that could come into play, industry variables, company size variables. And this is the biggest mistake people make, Shawn, is they say, well, for my clients that are 5 million and over in revenue, I'll deploy this solution. For those that are smaller, under 5 million revenue, I'll deploy that solution. And what they're thinking is the technology cost is cost prohibitive below the 5 million in revenue mark. Well, I'm going to address that in two ways. One, you don't want to service the teeny tiny clients unless that happens to be your mission, that happens to be your niche, and you have to be able to do that at extreme efficiencies and extreme scale. Frankly, I think the pilots of this world and the QuickBooks Lives of this world, H&R Block advisors of the world, they're going to scorch that earth. You don't want to play in that playfield. You can't compete against these multi-billion-dollar corporations, not even with outsourcing, not even with automation, because you can't compete with their marketing. And if you're going to go with businesses that are 1 million or 1.5 or 2 million and up anyway, then just go ahead and pick that single platform. So it's not so much that I think it's the tail wagging the dog to say, I will pick a technology for the smaller clients instead of saying, well, I'm just going to only go with those clients where the tech stack makes sense. The latter is better. So select small and select prioritized. I would start with the financial institutions. They're easiest to assimilate, as you mentioned. Payables would be next because that's high transaction volume and it adds a lot of value in the client experience. And then after that, It really does depend on your industry where you go from there, and what you prioritize. But up to 80%, maybe now in today's world, you could even say very soon up to 90% of what used to be done manually can be done by the bots.
Well, I think technology is going to play a big role. One recommendation is using tools that have bigger ecosystem, which you mentioned about. And second, I will say using those tools which are open, which can integrate with multiple platforms, because that's also important, because otherwise you will end up multiplying your work on multiple platforms, which is what I have seen a lot of firms doing.
Yes. And
So
remember, you've got platforms and you have sub platforms.
yeah.
So your platform might be Zero, or some GL product, and then your sub platform might be a payables product, something like Ramp or Rippling or Brex or name it, right? Bill. Well, you have to ask yourself, what do those platforms integrate with, right? Because going straight to the GL and kind of going around your elbow to get back to the payables may not be as organic as it going through the payables. So yeah, stacks are multidimensional now.
And I think one more addition is sometimes because we are traditional accountants and we don't have a view on technology, having a dedicated person having that understanding or focus within the department would really help. Who would connect with everyone, understands everyone problem. That if I'm using Teams, what are the challenges? Why can't I switch to Slack? So I think that is sometimes because everyone is so involved in client work, building their, serving individual clients, somebody with tech focus is not there. And when I say
Right.
tech focus, does not mean a developer or a designer. No, I'm just saying somebody who understands business use cases really well. Somebody
Yes.
who understands client problem really well. Somebody who understands that, this is my team, they are doing this. How can I really automate this, or how can I reduce the number of steps?
Yeah, a specialist, either a consultant or in the firm, depending on your size, whose job is to constantly watch the changing space, constantly vet technologies, constantly innovate, and do it at a measured pace with a plan, with the change leadership. If you can't afford that role, accountants listening in-house, then you need to find an outside consultant who can play that role for you, kind of a fractional CTO or fractional CIO.
Well, I think I don't want to do a very long episode. I think we have probably 7 or 8 more points to cover, considering what we
Well,
have.
maybe I can come back on and we'll cover those.
We'll cover those, but I think we covered a lot of things. Thank you, Joe. Thank you for your time today, and it's always lovely interacting with you, whether it's here or meeting at the conferences. But thank you for taking the time out and sharing those insights.
It's always great talking with you, Shawn.